Interested in speaking to our speakers, so please take the conversations in the hallway, please. We are just cruising through the day. You guys are troopers. Again, thank you to our previous panel. They'll be able to answer questions in the hall. And now we're going to have a more intimate conversation. It's going to be a fireside chat. And we're going back to money. Lots of conversation today around money, payments, liquidity. Lots of conversations around money. Well, this fireside chat is about LPs and capital formation. And we're going to welcome Wu Pei to the stage. Please give her a warm welcome from IOBC Capital. Xiao-Xiao J from KKR, please welcome to the stage. And Elsa Backdahl from Pantera Capital, welcome.
Bonjour, comment ça va? Thank you. So my name is Pei Wu. I will be the moderator for this session. Today's panel, so we have two distinguished panelists. And before that, this is the panel about LP and capital formation. So we are thrilled to have you to be here to explore the latest trends, opportunities, and challenges together today. Let me introduce two distinguished panelists today. So Xiao-Xiao J, the operating partner at KKR, and Elsa Backdahl, the capital formation director from Pantera. So each of them brings a wealth of knowledge and experience in the crypto LP and capital side. So yeah, first of all, should we do a quick introduction of ourselves? Elsa, you want first?
Thank you, Pei. My name is Elsa Backdahl. I'm a director on the capital formation team of Pantera Capital. Pantera Capital is one of the largest and longest standing investment firms focused exclusively on blockchain and crypto. We launched our first crypto fund in 2013 when Bitcoin was trading at just $65. Today, we manage over $5.5 billion across passive, hedge, and venture strategies. I've been in crypto since 2017, working at Pantera for the last 2 years, and prior to that, I was working in the crypto ETP business in London. Thank you.
Wonderful. Xiao-Xiao?
Yeah, hey guys, great to be here. Xiao-Xiao here. I'm a digital operating partner at KKR. I've been there for 3 years, co-leading our digital asset and crypto strategy, alongside other things. I was a tech founder before joining KKR in the Web2 space. Also built sort of Web3 use cases before going on to the investment side. And KKR, as you may know, is one of the largest asset managers in the world. It's a pioneer of the private equity and venture capital space. We manage over, I think now 600 billion in AUM, mostly obviously across all kinds of strategies. But at the core of what we're doing is really we're backing the best entrepreneurs in the most interesting markets and future category leaders, and that has served us very well over the last 40 years, and we continue to do so now in the space of tech and digital innovation, including Web3 as well.
Great, thank you. So Pei, based in London, I'm a managing partner at IOBC Capital, which is Silicon Valley-based single-family office, backed by one of the largest asset managers in Asia. So we with 5,000 plus global employees. So we are very focused on our fund-of-fund investment in crypto and also direct investment to many startups. Yeah, so let's discuss the first question. So from this moment, so how are you fundraising at the moment, and how do you see the LPs market what are the current trends for the LP investment strategies? Yeah.
Thank you. So LP stands for limited partners, and these are the investors that trust us to invest in the blockchain ecosystem on their behalf. We're currently seeing increasing demand from institutional investors, especially in regions with friendly crypto regulation. These investors want a couple of things. I would say to get the first foot in the door, fund size, track record, and good governance, risk management is really necessary. But then they look for different things. Some of them, like corporates, look for strategic investments. They want to do co-investments, and they want to partner with the funds that have the best access to deals. And then some other institutional investors are more interested in their investments trickling back into the local economy. Another investor segment that we're seeing growing interest from is family offices, and especially some of our family office LPs who we're sending back distributions to and who want to stay invested in the blockchain ecosystem. One more investor segment that I think is taking crypto much more seriously now is wealth managers, and especially some private banks that have developed internal training programs for their private bankers to be qualified to advise their clients on crypto allocation. And in terms of emerging trends and ways to invest, what we're seeing with our LPs is they're no longer interested in having just Bitcoin and Ether. They really want access to the full spectrum of blockchain. So our strategy, we've developed a strategy that is hybrid and where we give our LPs access to the full spectrum via 4 underlying strategies, which are venture equity, early stage tokens, the private tokens, liquid tokens, and then what we call special opportunities. And an example of that is discounted tokens with a lockup. Yeah.
I obviously don't work with as many LPs as you, but, we are an LP in the space as well. We invested into a number of top early stage Web3 funds in the space, so I can comment from a perspective of a large LP in the space. I think generally there's definitely a learning curve on many of these LPs, right? At the beginning, very often it's about, as you said, get the foot in the door and try to educate yourself. So there's sort of an education and exposure point of view. But I think over the time, it became very clear if this space is going to mature and more successful projects and founders will sort of grow to a more scaled international scale. Then some of these early fund investments that we made are also great multiplicators, right, in terms of future deal flow and just generally in intelligence, because some of the winners from the portfolios of these early stage funds will scale, right? They will become successful in further funding rounds. They will go to the public markets potentially, and then a bigger private equity investment like KKR will become more relevant. So it's also a relevant sort of deal flow and intelligence channel for us.
Thank you for your input. I totally agree, because also from family office side, so we look at like alternative investment assets, also a lot of like private equity, venture capital, also liquid fund, hedge fund. But no, the trends for us can go into some more how to make more mass adoption like investment, maybe like more liquid side, also maybe add on that, maybe a lot of AI plus, yeah, like for that. Okay, cool. Let's discuss the next one. So we all know the Pantera AUM is over 5.6 billion. So how do you manage to bring more Web2 world TradFi LPs to Web3? Also, what are the best practices for like the fund managers to like those in LP build up like a long-term and strong relations with them?
Yeah, so in addition to performance, of course, we think that education and trust is really, and good communication, clear communication, consistent communication are key. So for the education part, we've been writing what we call blockchain letters, which are really just newsletters where we share our views on the market, discuss recent investments. We've been doing that since 2013. In 2013, the first letter was read by 35 people. We recently launched, or shared, our 100th letter, read by over 100,000 people. So consistency is key. And our LPs they want to be educated. They want to learn about blockchain, about crypto. And so we organize webinars with our founders. And we also do a summit where we invite all our LPs to meet with our founders physically. And that's always a really good time.
Great. And Xiao-Xiao, how do you like more TradFi? So what do you think the TradFi Web2 or LP will come to Web3? So what's a kind of like way?
Look, I think there's always going to be different segments in any market, right? So you always have early adopters in sort of also in this addressable LP space. So I think some of the probably family offices that you can see, they are more agile because you have just one or very few decision makers. If they are, happy with the risk reward sort of balance of crypto investment, they can very quickly sort of make a decision. I think for bigger institutions, there's obviously the consideration of the potential downsides if something blows up like FTX, right, in your portfolio, that could have reputational downsides and regulatory blowbacks, which can be very painful, right? And so that's I would say probably a more careful consideration of these potential downsides with the obviously higher upsides you should expect from these higher risk assets. And then obviously you always have on the very forward-leaning spectrum, you have just more individual people that simply are in the know, they know what's going on, and then they always want to kind of build a stronger portfolio that is biased towards higher returns. And so I think from our perspective, we made the step a couple of years ago, 2-3 years ago, to really like have exposure and build a portfolio of early stage fund investments in the space. But it's not just for financial returns, right? Obviously that's very good if you can have higher returns than traditional assets or traditional alternative investment classes. But it's also the added strategic benefits that you get from having access and intelligence from like some of the smartest people who do nothing else than talking to like you guys, talking to the new founders and the successful founders in the space, and then having essentially a filtering mechanism through that to kind of see what works in the market that is so quickly evolving.
Yeah, great points. So how many VC managers here? VC managers? Oh, wow, great. So one thing for this question I really want to share. So for example, last week, we invited more than like almost 50 family offices from Asia to San Francisco because we co-hosted with Microsoft, IBM, NVIDIA, XAI, OpenAI in San Francisco for this Gen AI Summit. There were like 35K or plus attendees. So when we invited those family offices from Asia, the thing is we want to educate them because they're very successful in biotech, let's say fintech, also real estate. So I think that part is more TradFi people want to access into Web3. So even until now, until this moment, so we are trying to bring more family offices from Asia or from the background with TradFi to Web3 in this sector. Cool.
Can I ask you what countries specifically?
Oh, yeah. It's mostly like you see a lot of Chinese also live in Paris or London, right? So mostly like from Singapore or Hong Kong, Macau, mainland China, Shanghai, Beijing, Shenzhen. Yeah, because all of them want to know what happened in the global. So that's why they really want to come out, to fly out, and to see more. Yeah. So I think it's definitely a trend. And yeah, let's go through the next question. So Xiao-Xiao, we all know you invest like Dragonfly, Parify. Anchor Digital from KKR. You led a digital investment from there. So how do you see the trends or the KKR investment will bring like more, what are others, the sectors or areas are you mostly interested in? And also from the regulatory, the regulatory emerging in the market. So how does it affecting the KKR's investment strategies?
So as with any sort of emerging technologies, right, and markets, I think it's very difficult to kind of predict which subsectors or segments will ultimately win out. And therefore, I think you always require a portfolio approach, right? And that's basically the whole purpose of venture capital investments. You don't know who will win out, therefore you have to spread yourself, right, and make several or many smaller bets in the hope that one or two or three of those will become fund returners, right? They return so much that the whole portfolio wins in the end. And similarly, this was sort of also our consideration, right? It's impossible to predict like 5 years out, which of the Web3 sort of themes will win out, DeFi, NFTs, etc. You see the ups and downs. And so long-term winners, it's almost impossible to fully predict. And therefore, you need to kind of like just have, probably a broad-based approach where you kind of say, what are the most promising themes and subsectors that have the potential, and then within those themes, who are probably the most specialist, the most knowledgeable, fund managers that combine the expertise on the technical side, but then also value add to the founders of that particular space. What do they actually need, right? And so, I think in the portfolio construction that we thought through, obviously geographies is one important angle, right? Because because of the changing regulatory landscape, it's also very difficult to say, which jurisdictions will, become more lenient towards crypto. And so we wanted to have exposure in the big regions, North America, Europe, EMEA, and then Asia Pacific as well as the themes, right? So anything, gaming, NFT related, we want to kind of invest into the top, small, really specialized, fund manager in that space in Web3, similarly in DeFi, Ethereum infrastructure, and then some of the more generalist names that you might know, Dragonfly, they're just very, very strong in a particular geography like Asia. And so you would want to have exposure somewhere where simply a company like Dragonfly will just probably see every deal there and win most of those deals that come out of Asia. And so that's the way that we sort of created a portfolio. And so far, I think with the good results, but obviously it's a long-term game because these funds return in 5 to 10 years. And then just after 2 or 3 years, I think you have very good markups, but it's really about the longevity that you can see, right? Can these funds return consistently, right, and survive, across bear and bull cycles.
Can I ask a follow-up question? Do you think the geographic focus is a sustainable approach in the long term? Because many of these companies, a lot of our portfolio companies, they start somewhere and then we connect them with maybe the regulator in Singapore as an example, or the UAE, they're interested in setting up a structure elsewhere. Do you think that some funds will always be focused on one region if these companies start moving elsewhere?
No, very good question. Obviously, this whole sector is much more sort of decentralized and global, and I think some of the traditional venture rules don't really necessarily apply. And added to that, obviously, you have the regulatory angle, which, as we can see in the US, has been like basically shifting 180 degrees, right, in either direction. And so I think the founders in a space necessarily will have to have much more agility, right, when it comes to where, things are located. But from a fund manager perspective, I think it's also very clear that in the end, it's the people's business, right? So ultimately, it's about connections between an investor and a founder with an idea, and the investor needs to basically recognize the potential in the idea and in the person. And ultimately, those, I think, nucleus relationships, that will not change, right? And so if you are an investor that just has been operating in Asia successfully and all of the Asian, and if you are an Asian founder, you want to have a conversation, right? You want to have this investor on your cap table, regardless of where you might set up shop and where you do your hiring and where you might, change like in 2 years. And so I think still like these relationships will continue and that they will have still geographic roots, right?
Thank you. That was very informative. Okay, last question. So where do you see the LPs is increasing their allocation into which areas? And also, how do you see the LPs will deploy in the next, let's say, 5 years' time?
Well, we only do crypto, so it's difficult for me to say anything outside of crypto. But one emerging theme, we could say, within crypto that our LPs are increasingly curious about, and we've heard a lot about this today and yesterday at the conference, is the intersection of crypto and AI. So yeah, there's a lot to be done there. We've made some recent investments. We actually did a webinar. Our latest webinar was on this specific topic. So if you're interested, you can go and check it out on our website. But this is definitely a theme of interest.
Yeah, look, from a macro perspective, I've always had thesis, right, that the Web3 space, you have basically a trifurcation happening as a big trend, right? So on the top level, you basically have the very institutional, regulatory compliant, companies and use cases that will continue to increase, right? We see that in the ETF space and a number of real world assets, right? So you will have a lot of like big players coming into the space that are already successful in Web 2, but will experiment and increase their share in Web 3. Then at the bottom level, you have the obviously crypto native innovation that will always be decentralized and very innovative in nature and not necessarily following local regulations. So they will always be a step ahead in regulations, ahead of regulations. And in the middle layer, you have that gray zone of like, centralized exchanges that, that are engaging in digital assets, but don't necessarily do things in a fully decentralized way. And so I think from our perspective, we definitely see the top level will increase in share. You see that in a lot of the institutional engagement. I also do believe that the bottom layer, there will be a lot of new trends, AI, crypto. Who knows what will come in the next 3 to 5 years? So there you have to work with the top early stage funds to kind of like really, always be in the know about what's coming and what are the things that are really getting traction on the early stage side. And then I think on the middle bit, this is where you have probably the bigger sort of retail adoption that will change, right? Just making it really easier for people to onboard into Web3. And so I think along these categories, this is how we sort of look at the space. At the top, that's where we probably will make most of the investments. At the bottom is where we will invest into emerging, asset managers. In the middle, I will just have to, connect with the most relevant players in the space, like Binance.
Yeah, thank you. We don't have time here, right? So there's no, sorry, if you questions, maybe after panel. And thank you so much, our panelists, to give the very valuable insights. And thank you for all of you having with us today. Thank you.
Thanks again, Pei, Xiao-Xiao, and Elsa for a really informative discussion. All right, we are just going to move right into our next panel. We'll be speaking about crypto markets in